Welcome back to our series. We've started looking at the introductory part of financial accounting, and we are done. In the previous lesson, we looked at the meaning of financial accounting and purpose of financial accounting. Now we are moving on to the next stage of our presentation, and by the end of this lesson you'll be able to explain what is meant by bookkeeping and stages in accounting process. Okay, so let's begin with bookkeeping. We said in our introductory parts, we said accounting has to do with providing business information to its users for vital decision making. Okay, so how does the accounting helps in providing this information? Okay, how can we get the information needed for these users? For us to get that, then there's a need for us to set a system in place that will help us to capture whatever that happens in the business, or keep records of whatever happens in the business. Okay, and that one has to do with bookkeeping. So when you say bookkeeping, is the art of keeping or recording business transaction in the books of accounts of the business. Okay, so in everyday transaction that happens in the business, we have to record them in the books or record them in the accounts of the business. Okay, so we have different transactions happening in the business. We need to make sure we have a set of account that keeps tracks of these transactions. Okay, so at the end of the day, we'll be able to get the needed information for these users. So when you say bookkeeping is the art of keeping or recording business transactions in the books of the account of the business. Okay, so in examination, when you are asked to define what is bookkeeping, this simple explanation that you can give. Now that we are done with the meaning of bookkeeping, let's move on to the stages in accounting process. Let's go back a little bit to the meaning of financial accounting. We said that accounting has to do with identification, analysis, measuring, and communicating. So from the definition, you can see there are stages, or there are processes that we need to follow, or there are steps that we need to follow in order to obtain the needed information that will help users to make a vital decision making. Okay, so today we are going to look at the stages involved, okay, the steps involved in obtaining this information. And as I said, from the definition, we could see that accounting involves some sort of process, okay, in communicating information to the users. So the first stage that we have to talk of is collection of source documents. Okay, so I said we have to capture every transaction that happens in the business, and the transaction that happens with the business comes with sort of document, a source of document. When you say a source of document, they are the document that gives an evidence of a transaction that has happened. And you can think of, or the example that you can think of is invoice, receipts, and others. Okay, so the first stage in the accounting process is to collect the source of document relating to the transaction that has happened. Okay, you need to get, or you have to gather all the source documents that has to do with the transaction that has happened in the business. And the source document that you can think of here, we can talk of invoice, and you can think of receipts. Okay, so source documents, they are the evidence of transaction. Okay, they are the document that give evidence of what has happened in the business. Assuming an accountant give money to a junior account officer to go and buy something for the business, you cannot just come back and say I've bought the item, but there is no evidence indicating that. Okay, so a source document has to do with a document that gives an evidence for a transaction that has happened in the business. Okay, so the first stage has to do with collection of source document. Okay, and when you are done with the collection of the source document, you have to move on to the next stage. Has to do with analyzing the transaction. Okay, so you have to analyze the transaction, and in analyzing the transaction, you have to group them into different groups. Okay, into different categories. Okay, those with similar nature are being kept in one side in that manner. Okay, so you have to do some kind of analysis to know even the impact of the transaction on the various accounts that you have in the business. Okay, the effect of the transaction on the account. Then you have to group them, and at this stage you have to group the transaction into different categories. Okay, so those with similar nature are grouped together in that manner. And in analyzing the transaction, we try to look at the impact of the transaction, how it affects the business or how it affects the account in the books of the business. So when you are done with the analysis of the transaction, then you have to move on to the recording. Okay, you have to start with the actual recording, and in recording you have to record them in the main books of accounts. Okay, you have to record them in the main books of the accounts, which has to do with the journal. Okay, so the first recording that you have to do, you have to record them in the main book of the account of the business. Okay, and in that we have to talk of journal. We will later in this course we will consider what is known as journal, the main book of an account. Okay, but for now, what I want you to know that the recording, the first thing that we do, we record it in the main books of the account of the business. Okay, and in that we use what is known as journal. Okay, then the next stage has to do with another recording. Okay, and at this stage we record them in the individual book of accounts. Okay, and has to do with ledgers. So now that the immediate past stage, we said we should record it in the main book. After recording it in the main book, we have to transfer it from the main book to the individual account. The individual account has to do with ledgers. Okay, then the next stage has to do with financial statement preparation. So now that we've recorded them in the individual account, we have to summarize it. Okay, don't forget that in the definition we said we have to summarize the information. Now we have to summarize the information in the form of presenting financial statements. And when you say financial statement, we are talking about the trading profit and loss account, the balance sheet, the cash flow statement, and the note to the account. Okay, but at this stage you'll be considering the trading profit and loss account, the balance sheet, and then that of the cash flow. Okay, so in financial accounting, at this stage, when we talk of financial statements, we are only looking at these items. But when you go to the advanced level, you meet something like changes in equity and then the note to the account. Okay, so the financial statement preparation, we have to summarize the information that we've recorded in the individual account in the form of presenting trading profit or loss account, the balance sheet, and then that of cash flow statement. Then when you are done with the financial statement, you have to move on to the last stage, which is not the least, the interpretation of the financial statement. Okay, you have to interpret the information that is being presented on the financial statement to see some kind of variation and similarities between different information. Okay, you can compare year to year and know whether you are improving or retrogressing. So it will help you to know whether you are improving or retrogressing when you do some kind of interpretation or analysis of the financial statement, the information that is being presented on the face of the financial statement. Okay, so this is where I will end the lesson on this series. So we considered what is meant by bookkeeping. Okay, bookkeeping has to do with keeping business records, okay, or business transaction in their books. And we move on to the stages in accounting process, okay, because from the definition we could see that accounting has to do with some sort of processes, okay. And he said the first stage has to do with correction of source documents. The second stage has to do with analyzing the transaction. The third stage has to do with recording. The fourth stage has to do with also recording. Then the fifth aspect has to do with financial statement preparation. Then the last stage has to do with interpretation of financial statements. So in examination, when you are asked to state the stages involved in financial accounting, these are the information that you can present to the examiner. Okay, so we say stages, so it should be the first one should come first. You should not start from the last one. Okay, stages involve some kind of steps. Okay, you cannot jump. So when you are presenting, the first one should come first, following the second one in that manner. So if you have any question, you can leave them in the comment section, and then I'll be excited to attend to it. If you have not subscribed to the channel, can you do that for me? And press on the bell icon so that whenever we upload a video, you will get a notification for that. Okay, share this video on all your social media accounts so that more students can benefit and I get more subscribers for that. Thank you very much. See you in the upcoming series.